Hey everybody, welcome back. Well, NVIDIA tried and almost made it, but we really didn't get that emphatic close over the 55-day moving average, but we can see some real volume coming in here and some follow through, which is nice to see. We did have some news at after hours and during the market that I actually think put pressure on NVIDIA, and we're going to get to that. Most important, we can see the broad-based rally now 4 days in a row on the futures market. And it really doesn't seem like we have a lot to worry about before getting up to this level. Let's drill into this before we go any further so I can utilize the lines that I have here. If you've been watching this for a while, you know very clearly that I like marking the 830 bar because that always tells me when there's data out where exactly people are going to be located. In other words, where do we see the majority of people acting with their algorithms and high-frequency traders? And it's pretty clear when you start to look at this stuff, and you can see that level right here, right on Thursday at 8:30, right when PPI came out, and we can just see exactly how you acted there. The battleground around 8:46, and then you can just see around 9:30, you're just unable to really do anything in that area. And I always like leaving these on. The other thing that I like to do too is you just always take a look at the previous day as well and see how that did. But what we want to do here is this. It helps to take a longer term outlook, look at the past couple of days of what's going on, and you can see that 830 bar here, how we rallied up past it, fell back, rallied in there, flipped over, and then went. And these events that were marked here are what? You'll remember these were bond auctions. And then you come into today as well. Now, if we reset this chart very quickly and just look at those levels, I find it fascinating that you are here, battled all day, couldn't get over, tried, pulled back, rallied, finally pushed. And what's so fascinating, and I'm sure you guys find it just as fascinating as I do, it just so happens that you push right around what? The 30-year bond auction that happens right there. And of course, you know that at 11:30, you have another bond auction right in there. It really didn't hold in there, did it? But that 1 o'clock, that 30-year, you blew right through that. And you never look back. If you're not watching the bond auctions and you're trading the futures market or you're trading options, I really don't know what you're doing if you're not watching those. So I would consider yourself somebody that has just learned something that's very important. They need to watch the bond market, and you need to watch how that's going. And you need to mark these bars. And if you don't, again, you're at a disadvantage. It's very objective that these bars are significant. No matter what level you're trading at, you're going to want to see how you react to certain levels and how much supply or demand is behind it. On the rally up, I did find this kind of interesting. Who fat-fingered the trade? In 1 minute, you just fell out of bed. This was troubling. I'm going to show you why this was troubling to me. But when you fat-finger a trade like that, just out of nowhere, I mean, maybe it's a mistake, maybe it's not, because there was zero follow-through on it. But you can see how it started to set up and roll. That's why I don't think it is. And then when you get to the top of that bar, look how you were unable to close over it. So I'm not really sure why the panic. I have some beliefs on what people saw out there today. And you're seeing it right here again. And there's one sector in particular I'm just not really crazy about. We should probably get into it first. But right to that level, right at 830. Now, did you assume it would hold there? Not really. I would expect that you'd have another down bar. But nevertheless, we held. But into this, you have two things you can do. You either hold and pray, or you honor your stops. I tend to honor my stops because I've been through this for a while, and usually there's another bar down. In this case, there just wasn't, and you held there and you bounced. So let's see what happens. But let's talk about some of the things that are going on. Number one that I think is very important, and we're all probably aware of this, but Ally Financial at this point warning credit conditions, potential challenges of current economic environment. CFO reported investing conference that credit challenges have intensified with borrowers facing difficulties due to high inflation, weakening employment situation. And the firms are coming out and downgrading it, and you're trying to hold in here. So if I take off my levels, for example, this is what you did. You were at 40, you came in, you opened at 35, and now you're at 32. This is a concern because there's no bounce. If it's a blow off, then you have some kind of bounce. You're not bouncing at all. Matter of fact, all you're doing is having trouble with the gap, right? Mind the gap, right? Always watch these gaps and see how they act in there, usually places of interest. And you can see how we've been wedged in there for 3 days as the battle continues. I think that's very important. The second thing that happened today was Wells Fargo. Wells Fargo is talking about suspicious activity, and their stock fell 4.8%, enhanced anti-money laundering measures following an OCC agreement. I'm not sure what the issue is here or why this came out the same day or within 48 hours of the other. I'm not saying they're related because they sound like they're different issues, but what is the issue that caused this? And we really didn't get a full picture on it. Now, This I thought was kind of interesting too, because usually settlements, when they're done, you bounce because it's behind you. That's not what this did. This fell right out of bed, almost like there's more to come. And this was somewhat concerning. So you can see the range there and how fast you fell. Then you have the bounce, the retest, the rally, and then you fell back down again. And again, I like these kinds of trades because I always wait for them to kind of bounce back up, and then you can find a spot either here where you can pull something out, and here was another spot where I just was able to pull stuff out. What you do is just look for these parts where the new bar starts and the opening is, and you can usually find fairly decent entries right around some of these. You just mark the tops of the 1 minute bar. Specifically, if the open is the high, they're usually pretty good ones. So you can mark that. And the other thing that you could always do is you just drop an anchored VWAP from the moment that the bar actually breaks and the news hits. And that'll tell you how you're doing. So for example, you rallied back up to it. You couldn't get over, you failed, you rallied back over, you start to roll, you crack, and then you can just kind of see from there how it's going, right? So you always want to watch that kind of stuff, marking the anchored VWAP on the bars. The other thing that you can always do with these kinds of positions, also just drop a volume profile from there, and you can see where all the players are. The one thing that's nice about doing it this way is you can see where you would have an issue and where you would not have an issue. In other words, if you were up here and there was tons and tons of supply, would you really want to short into that? Probably not, but you know your short's okay when you get down to this level and you're just going through it like a hot knife through butter. So you know you're in kind of a good situation there. So there are 3 things that you can always do to kind of mark off the trade and kind of see where you're going. But this is troubling to me, and I don't know why this happened this day. And this is the other thing that's kind of vexing, I guess is the best way to say it. So at the time of recording this, I have a position here, and I'm doing okay with it. I won't say I'm doing great, but JP Morgan sold down. Diamond's retiring in 3 years. That's not going to do it. You're getting Wick City in here, but where's the bounce? Like, where's the real bounce? Like, hey, we really don't have a problem. And this is what I mean by that. So we have this bar that comes out when Ally has that news, and that bar gets you down about what, 6% from open to close. Forget the tail. All right, and then you go and take a look at Goldman, and Goldman's bouncing as well. We'll get rid of my 100 levels there for a second. And then you see Goldman bouncing. And you're like, okay, well, you know, you did bounce, but on that move, you're down 5%. You're not shaking it off. And I think that's one of my concerns. You broke the 55-day and you're not getting over it. Then you go and take a look at JP Morgan and you're not bouncing over the 55. So when I get close to it, I'm rejecting. That's my concern. And it's not just this group, and we'll get to it, but I'm not bouncing over it. If I'm under, I don't have institutional support. Remember, I used a 12, a 22, and a 55. You should use what you're comfortable with. The point that I'm getting here is if I can't bounce over that level, then I have an issue, and I have to figure out what I'm going to do about that. That becomes a real problem for me, and I'm not really sure what to do about it. I think that you have to monitor it more than anything, and that's kind of where my head is. So if I look at XLF, we're over, right? Okay, 12, 22, 55, okay, KRE, and then we go here, and you're just sitting there. Even the top regionals, which I have a position at the time of recording this, and I look at that and go, all right, well, we broke, but we certainly didn't get back over it. As a matter of fact, I've got a 12-22 cross here. And so this starts raising some more, real questions about, what's going on with the regionals, what's going on with the banks. You cannot have a sustained rally in the S&P unless you have financials. I know we're bouncing. I know it looks groovy, but if we lose the financials, this will be unsustainable. It's just the way that it is. You need the financials to at least hold their ground, and we don't seem to be doing that. Now, another thing that was interesting was names like Altria, which we own cheaper, are starting to roll here, even though it's becoming clear that they're going to cut interest rates, right? That's becoming very clear. So then you start watching the PMs of the world who said they're going to increase their dividend, MO's rolling. You start looking at TLT. Okay, we're hanging in there, HYG. You're not falling out of bed. This is going higher, LQD, right? So, all right, so we're still seeing movement in the bonds. Even if it's sideways movement, we're still seeing movement there. TNX, we can go take a look at that, right? Are we seeing buying of yield? And the answer is no. So then we'd have to go and say, okay, well, if they're not buying yield and they are buying the XLK, why aren't we getting through these 55-day moving averages? Let's go take a look at the XLC. Okay, we're kind of through, but we kind of stopped there amongst all three of these. So are we going to push? Are we not? And we're just kind of in this weird spot right here. This is so far off from the 55, the SOX. And then you go take a look at the cloud names. And you can see there again, we're sitting right on the 55. So you're at this crux in the market right now. And while this is going on, we're getting mixed reviews. So you're getting Adobe that's telling us, hey, we're having issues again, down about another 10%. This quarter was great. This one, not so much. You're down about $50. After hours, you can just see it falling off a cliff. And they lowered guidance, and that's why. They beat a little bit here, but they lowered guidance. And you're down at the time of recording this. We don't have a conference call, or I have not listened to the conference call yet. But in the same breath, Oracle World, and Oracle's out there talking about how great things are at their conference. And this might actually even have the news. Now it doesn't, but they actually even raised guidance again from here, where they're going out to 2029 now and saying we see like $100 billion in revenue by then. It's a very bullish call, and I'm surprised they didn't do more of it here, but they're really hammering it out over here, and the stock's up another $7, $8. If you take a look at this after hours, it's kind of crazy what you see, that movement. So if we start looking at some of these names, we're getting mixed reviews, which is, it's always the case, but are the stronger getting stronger? It does feel that way a little bit, right? So then that starts to beg the question, if that's the case, why can't we get through these 55-day moving averages? And am I just early? Meta got through. Google looks like a dumpster fire. It can hardly rally. It can hardly get above, it can't even come near like the 12. I'm actually short this and haven't had a bad night's sleep, which is kind of weird. You'd think I'd be worried about it, not even close. So when I see this kind of stuff, it does make me concerned. The one thing that I would say is it does seem like we're switching themes a little bit, and we're heading towards this data center theme, doesn't it? With names like Now breaking out, and this was another name that we actually traded today, but look at this VRT and how that acted today. See, like we're seeing these pockets where VRT is popping out, and this video is a little more micro, and I think it needs to be right now, because I think we're changing themes. So if I start seeing stuff like this, and I'll get rid of my levels, but this was a really simple trade. You have a 12-22 cross, 55 here. I used a 12, a 22, and a 55. You should use what you're comfortable with. You can see the close over the 55, right? So I get that, and I get my higher high push, and the volume exceeds. So this was pretty much a no-brainer for me to try this, and it worked out fairly well. I think we're up $3 on it already. But I don't see a real issue with it at all. I mean, I don't really see any problems to get up to the 90s. And the data center story seems to be the one that's on fire. So you can see that even today with TT, the cooling systems like VRT or TT. I mean, when you start to see this stuff, this is what's going on. And some of the other names that we started buying, like here, like DLR, this stuff's working. So I do think that there are themes out there that are going to continue to work. If you look at EQIX, and we can see those kinds of pushes. And when NVIDIA came out with their statement yesterday, and I would read the news on this, I'm not going to have time to go over it, them talking about how the data center, how they're going to be able to, hyperscalers are going to rent these data centers out, make money. This whole theme makes a lot of sense. And we don't have the same issues with CPI and PPI because they pretty much came in line or down, and I'm not going to spend a lot of time on it. But I do think you're at the point in this where you should be looking at the pickaxes. I think you should be looking at the tools that you need to sift for gold versus buying the gold. That's where I think you're at. And I think that's why you're seeing the DLRs of the world and the VRTs of the world. And it makes you wonder, do you see like the VSTs of the world? You start seeing the energies, do they start to rally? Right now they're hitting that yellow line, the 55, right? I use a 55. So when I see this, it does give me, okay, here's the new theme. Because if we start looking at the PC theme, I don't think we have a product, like an AI product. We have Apple that just gave a whole talk and they had no product. Buy our new phone, and if you go and listen to it and they get into it later, you buy the hardware, and later when they're done with the software, they're going to load it in. I mean, that seems kind of crazy. That they've never done that before. It shows how behind the eight ball they are and how desperate they are. But there's no follow through there. There's none. And you see Microsoft again stopping right there. You look at something like a Dell today and you're seeing it try to push, but they're laying people off, talking about, well, we see PC sales slowing, right? So again, they're laying people off. Well, why would you lay people off if these AI PCs are going to start ramping everything up? See, there's a lot of dots that just, when you really start digging into it, they're not connecting. But you start seeing names like AVGO, and this stuff's like, this is breaking out. Actually, we did a trade on this. Here, take a look. Watch this. Because this is a great example of how to look for relative strength. You're just being bought on every dip. It's not even a question. See it? Bought AVGO. I'm out of position on this, and I know that I am, right? The first thing I'll do is just pull something out, like right into a push like that. I got in at 650 and change. Right when it went into that 61 and change and did that little push right there, I closed a chunk of it. I'm buying this bar, so I'm hoping for the next push. I get it, I pull out a chunk, and now I can sit with it and see if it's going to work. Always go and look and see what names are hitting highs because it'll tell you what they're buying. Again, with the AVGO, I understand that I'm out of position. Now I'm up $1 in it, so I'm already pulling more money out of it. If I'm day trading, do I want to sell here or do I want to sell here? Duh. I want to sell here. I have to sell when I'm, high-fiving the bros. If I crack that bar to the downside, I'm probably going to trim a little more. Don't do it. We had such a good thing going. Trimmed more into that. When it did that again, I trimmed. And that allows me to hold it. And then all I have to do now is just watch this. I make sure I hold there. Because if I break that, now I'm host. Trimming AVGO into that. Now I'm up almost $3 in that AVGO trade. I would just be ruthless, guys, with stops today. Absolutely ruthless. 5 minutes ago, you just had a bar that went from 161 3/4 to 159. And now you're at 64 and everyone's high-fiving themselves. You're 1 5-minute bar away from just disaster today. Keep moving the stops up. Keep pulling money out left and right. You're not going to want to be there when the party ends. And the party always ends. Now, I hope that was helpful. It's really important for you to get this concept, especially when trading. We're going to leave JP Morgan up here, and we're going to throw JP Morgan into a line. And then what we're going to do is just take the Qs, the SPY, we're going to take AVGO, something like an Apple, and we'll take NVIDIA. This is really important for people to get the concept. So if I go here and just look at a 1-minute chart, and then we're just going to go here, and I want to go to, let's just go to the 12th. And if you look here from that time on, you can see what dropped and what kept going. Right? Everyone can see that at the end of the day, we really got no love whatsoever for the financials today, no matter what happened in here. And then we can see the AVGOs of the world, and we can see what happened with NVIDIA. A matter of fact, when we were trading, you can actually see that AVGO made more sense than NVIDIA did because of the movement, right? Now, if we take out the rest of them, and I always do this with names that I'm looking at because I want to see who's leading. Right? You always want to see who's leading, but if we went here and let's take out let's just block out the SPY for right now, and the JP Morgan, let's block that out as well for a minute. We'll hide that, and then let's just block out the Apple as well. So let's say that you were trying to figure out which of these names made the most sense, and what we'll do is we'll come back to this here so you can see this in detail, and you're watching these movements. So you're down, and then after you're down, one of these hits a new high, okay? And the one that hits a new high is going to be the AVGO. I hate when it does that, but I have to come all the way over here for that to get back over. It's kind of crazy they make me do that. Now you can say it. I wish they didn't do that. But what you're going to see is you're actually going to see the one that moved, right, is going to be the AVGO. Now, I think that's pretty important. So let me just click on this real quick, and we're just going to mark that off there at 9:30. So you can see where we're at as we scroll through here. So market drops, right? And then with that drop, one of these hits highs, one of them does not. So what you're doing is by elimination. In other words, I eliminate that one, and then you're like, oh, wait a minute, I dropped, and then I'm ripping into the drop. This is the kind of stuff you want to catch. Because what that's telling you is that, wait a minute, I'm hitting highs as the NASDAQ's dropping. So then you have to ask yourself the question, if the NASDAQ goes flat or the NASDAQ goes up, what's going to happen to AVGO? Well, it's going to lift. Okay. So you don't know that if something's acting a little weaker, right? And we already had a rip. So when this is dropping and then you start taking a look at it, well, the market's dropping too at that 950 level, right? So you don't know what's going to happen there. But when you start taking a look at it from this perspective, you have a completely different looking chart, right? And you can see that where you just rip up. That's exactly what you're looking for. You're looking for that relative difference. It makes an enormous difference in the names that you're going to play. For example, if you were looking at something like this, and then you were also looking at something like Apple, you already have your answer on what name you're supposed to be playing. Because if you look at Apple, Apple's actually underperforming the market, didn't bounce at all. And AVGO is ripping people's faces off, right? So it would tell you which name, and let's say you thought the market was going to get weaker. Well, you might want to stick in the short Apple versus shorting something that is on fire. Really important concept that in the middle of the day that you can look for relative performance. You can also do it on hourly charts. I don't find it as helpful because you can always have news that's going to play with it. But intraday, sorting this way is one of the best things that you can take a look at. A couple key factors that I think are really important that you should know for tomorrow. If we take a look at the market, the 5-day moving average stocks above the 5, you're in the middle of the road. You're not down on the 50-day, you're not down on the 20, and you're certainly not down the 200. You're not at any trough level here that would tell you that you've sold off. And there's a couple other things that we need to focus on. So you're middle of the road here. You're not overbought, you're not oversold, and you're going to go into option X tomorrow. I do think it's important to understand that you're in a position here where you're just starting to get overbought, right? You're not really overbought yet. So could this have more legs? Yes. But you're certainly not oversold anymore. And based upon that, it's certainly not an area where you would want to consider that. So just FYI, it's certainly something where you're middle of the road, but you are getting to that point where you're getting overbought. If we were to look at this on a 4-hour, it might give us a little bit difference, right? Where you have plenty of room. You're certainly not overbought there. But on the hourly, I think we're going to want to pay attention to that. If you take a look at the cues here, you're overbought and you're starting to go sideways. Now, what I don't really like about this is this overbought versus this overbought. We didn't make the same level. So that's not ideal. And what you're seeing too, and just take a look at it because you'll see it, even though I don't want to see it, it's there, where you're making these what? Bonk, bonk, bonk. What are we doing? We're making lower what? Highs every time we're rising over this. That's not groovy. I really don't want to see that, right? So we're kind of wedged in here and we have to pay attention to that. We know what our concerns are and we'll address the concerns more as time goes on. We'll get a better feel for it. So is this some kind of rally and we're going to roll back over again? We still don't have leadership in the market. We're trying to find it, but we don't. And then if we just look at this on the 15-minute, yeah, you still would have to think that you're okay with pullbacks, at least on the short term, because the 3, the 5, and the 8 are all starting to point up and they're all crossing. And that's what you're looking for, right? You always want to make sure that you're aligned. What you want when you're doing this is you want the 3, just like it was here. See how the 3 and the 8, 3 and the 8 are going through and they're pointing up. And you can start seeing how that's curling too. It just makes sense. If they start moving, you might want to start, hey, maybe we buy those pullbacks now instead of panicking those, right? Just because you're in the same spot on a chart doesn't mean it's the same area. And you can see this on the SPY too, where you're in that area. Let's pull this back down here. You're in that area where you're seeing those crosses. And then you're going over here and you're seeing the same crosses. And that's exactly what you're looking for. But what we need to see is just how this plays out. So we really would be more interested in dips than rallies at this point, just based upon where we are with the RSI. That's it.